Welcome to Issues and Answers with your host Diane Kinderwater. Issues and Answers is presented as a public service to inform, educate, and better the lives of New Mexicans. And now, Issues and Answers with your host Diane Kinderwater.
Hi, I'm Diane Kinderwater. Welcome to the program. Get in, get out, get in, get out, or stay. What do? What am I talking about? Well, I'm talking about the stock market. What are we supposed to be doing these days? What are we supposed to be doing to hedge against inflation, which we know is here? You don't have to just look at the consumer price index to know that. You just go to the grocery store. Can you believe those prices? My friend recently went to a restaurant, actually in the restaurant, inside, not outside, and he ordered a rack of ribs, and he told me it cost, guess, what do you think? $40. Something that perhaps cost $20 just last year. We know inflation is here. We don't know if it's going to stay. We don't know maybe what to do about it. Well, I have a person who is my guest today who has all the answers. Well, that's a little bit of a hype, maybe not all the answers, but Greg Zanetti from Zanetti Financial is going to share with us his wisdom over the past few decades of his experience to make some sense of what is going on with this market, what is going on with trillions of dollars in deficit, what is going on with printing trillions of dollars. What does that do to your savings and my savings? We'll be back with Greg Zanetti right after this. Please stay. Welcome back. I found a great quote on Greg Zanetti's website that says, hope is not a financial plan. I mean, we all hope, we all have that, but do we have a financial plan? I'm not sure. But Greg Zanetti is here from Zanetti Financial to share with us, as I mentioned, all your years of experience. And Greg, have you seen something like this before?
No, not in the United States. Now, it's happened in Roman times, Greek times, Egyptian. Do governments repeat the same errors? They do. And we're on this trajectory of printing and debasing the currency, which is what you talked about in the introduction.
I feel it. I feel it strongly.
Right.
And I'm concerned, as perhaps our viewers are, Greg, and we have so much to talk about, and I'm going to let you do the talking after this, but
please.
that is my base. I've talked to my friends saying, you know, we worked hard all of our lives. We saved our money,
Right.
and now we want to enjoy it or pass it on to our
Right.
heirs. And I feel strongly it is not going to be worth anything, because I listened to you on the radio program on Monday, and I think it's Monday and Fridays, who share this information about the debasing of our dollar.
Right.
Okay, take it away, Greg.
Well,
what
no,
does this mean?
And you're right. Your instincts are right. You don't have to be a financial genius to know if you print trillions and trillions of dollars and just spray them across the country, spray them across the world, what will happen to the value of your currency? And down it goes. And what happens then to prices? Up they go. And so you mentioned it in the intro. What then do you do with money? Because you're trying to take care of yourself, your family, your kids, your grandkids, and the whole thing's gotten distorted. And there's so many dislocations where we have 0% interest rates, and you think, well, wait, you go to get a CD and it's paying 0.5% or 1%. Meanwhile, you know the inflation rate's 3, 4, 5, 6%. And
Go ahead.
And so what do you then do? Well, right now, because of this money printing and these 0% interest rates, we have a very convoluted financial system. So I'll give you a couple of examples. And we can value the stock market. It's not really very hard. We know how many shares of Walmart stock are out there. They've got it. And we know the price per share. All right, well, the number of shares times the price gets you a value. Well, you can then go to Amazon, Microsoft, Apple. You can just rack and stack, you know, all the companies in the indexes. And at the bottom right corner of your spreadsheet, you can value the stock market. What's it worth? And right now the stock market is worth almost 2 times as much as the entire economy.
Wait. The stock market value with just the prices, not really the price earnings or really what they produce, but just the dollar amount of that price of stock is twice as much
as the entire economy. Now, the way it should be, at least the way it always was the stock market was a subset of the economy, not the economy a subset of a stock market. This is totally on its head.
This is
Right. 3 times in history, we have seen the stock market get barely bigger than the economy. One time was 1929. You know what happened in October?
We weren't here, but we studied it in
Down
school.
she goes. At the start of the Great Depression. The second time it happened was late 1999. Diane, this was just before the dot-com crash of 2000, where the tech sector fell 80% in about 2.5, 3 years. And the third time it happened, and you and I saw this, was late 2007, early 2008, just before first Bear Stearns went down. Then AIG went down, and then in September, down went Lehman Brothers. And the great financial crisis of kind of our generation, the housing bubble goes boom. And in every case, the stock market had gotten slightly bigger than the economy. We are now double where we were. It's unprecedented where we are.
And what I've learned from you and listening is that it's the money being printed that's flowing into our government that isn't based on work. Meaning, I've learned that a dollar is just a barter. We have a dollar bill based on my effort of a work and product in the United States. And now that, based on an hour of work, here's a dollar, right? But now it's not based on any product. It's just it's based on nothing.
Right.
Except the printing press.
Yeah, well, and we don't even print it anymore. It's just digits.
Okay, sorry. I'm with the old.
We have a joke in the business now. What's the difference between $1 and $1 trillion? The answer, 12 keystrokes. 0, 0, 0, 0, 0, enter. That's what it's become. We are creating, we say dollars out of thin air, but really it's kind of an abstract. Are they really worth anything if you can create them out of nothing whenever you want them? And for a while it will work, because in our minds we all have this historical database. Yes, a dollar will buy this or that or whatever. At some point though, history's pretty clear. Confidence breaks. What are these worth? If you can print 1 trillion whenever you need them, is this really worth anything? And this is what you're starting to see out in our society. Is the price of lumber really going up that much? Or is it the value of our currency is dropping? Or is the price of copper, the price of gasoline, are those really rising, or is it our currency dropping? Right now we're still in the prices are rising thought process. Once it flips, once people go, wait a minute, it's our currency. I have to get out of this as fast as I can. I have to get anything that's of value for my digits. Now what happens is you get an upward trajectory in inflation that's pretty scary.
And slow down just a second. I followed everything until when people are realizing their money, their digits aren't worth anything. Why does inflation increase then?
It's a great question. I should have done better. It's the velocity of money. So let's say I'm a bank, Federal Reserve Bank, and I can print as much money as I want. I print trillions and trillions of dollars, and then I take all those trillions and I bury them in a hole in the ground. It won't cause inflation. It's just a bunch of money sitting there. But if I put that money in motion, now you get that money and it comes to me and I go to the gas station. The gas station attendant goes to the florist. The florist goes to the casino money spends it on whatever. Now that $1 is spent 1, 2, 3, 4, 5, 6, 7 times. Now the money's moving fast. The velocity of the money will start to push the prices up.
Because the demand?
Yeah.
Because there's so much, I mean, there's the demand, they have the money in their pockets and they can go buy, and there's more
Right.
demand and not as much supply of what they
Right.
want to buy. Okay.
And so this is what the Federal Reserve is trying to get going. They've printed all this money, but they haven't thought it's been moving fast enough. So what they're trying to do is encourage you to spend. Go buy something. They want to spark inflation.
They want to spark inflation.
Absolutely. Because we need to pay back the trillions of debt with inflated dollars. Right. We have 30 trillion in debt right now, Dan.
When I talked to you, I thought it was, I remember being 21. I mean, I remember being 17
Right.
trillion, but then just since this past year with COVID and the
Right.
stimulus dollars, it really went from about 22 trillion of our grandkids' debt to 30.
Well,
I missed that.
It was just
I
doubling.
missed that 8 trillion in there. Okay.
In ever decreasing amounts of time, we're doubling the debt. And so this is why we're keeping interest rates at zero. Man, we have to pay interest on this debt. Right now, interest rates are near zero. I want you to imagine that interest rates went back to normal. Let's just say 6% interest. We
Ooh, I
used to
love
get that. Remember
I
those
love that.
days?
I love that.
All right, let's see, 6% interest on 30 trillion is $1.8 trillion a year just to pay interest on the debt. Our income tax revenues this year, what you and I pay in, might be 1.9 trillion this year. Diane, if almost every dime of income tax revenue went to pay just the
debt,
interest
not the
on
roads,
the debt.
not security, not the Air Force, not.
Right, not the roads, not the bridges, all to pay interest on past debt? What happens here? But this is the path we're on. So what then do you do with money?
And Greg, when do you, because I want to get ahead of the curve since you're here sharing my viewers too.
Sure.
When can we get ahead before people start realizing, oh, it's not the price of lumber, but it's actually the devaluation of our dollar? What should we do and when should we do it? Yesterday, we should have done it all yesterday,
yeah.
I guess.
Follow what the rich guys are doing. If you follow the big money, they're always ahead of us. So let's take one of the richest men in the world, Bill Gates. And he's in some hot water right now, but let's just talk about his money. Guess who the largest owner of farmland is in the United States? Bill Gates. Think about that, Diane. His product is high-tech, about as high-tech as you can get. Corn, wheat, soybeans, he's loading up on that. That's a pretty big difference. That's not his product. Why has he done that? You can't print corn. You can't print soybeans or sweet potatoes. You can't print wheat.
Or dirt.
So why are you seeing food prices rise? You can't print it. And so what's happening is big money is saying, I can protect my wealth in things that can't be printed. Let's take another one. Who is the largest owner of water rights, private owner of water rights in California? The answer is the Harvard Endowment. Diane, think about that.
That's across the
That's
country.
across the
That's
country.
across the country.
Why is an East Coast university buying up West Coast water rights by the billions? So much so, the California legislature was meeting to try to stop them from buying more. Who sits on the board of the Harvard Endowment? Oh, let's see, the big wigs from Amazon, Twitter, Facebook, JP Morgan, Goldman Sachs, high tech, high finance. Water is about as far from their product as you can get. Why are they loading up? Because you can't print water, there's no substitute for it, and as prices rise, who makes money? Guess who the largest owner of silver is in the United States? JP Morgan. And it's an investment bank. They don't need silver for their solar panels or the little dots in your phone to make the connections or for their electric vehicles. JP Morgan does none of that. Why has an investment bank loaded up with nearly 1 billion ounces of silver? Because they know you can't print it. So if you start looking that direction and think, wait a minute, okay, I'm going to have inflation, papery assets will become suspect. If you can't value a paper dollar, how do you value a CD? How do you value your checking account? How do you value a papery asset like a stock or a bond? But wait a minute, something you can touch, something you can hold. Low tech might be the way to go. And now people start saying, low tech, all I hear about is high tech, high tech, high tech. Well, they have us focused here. Look what the big money's doing. They're loading up over here.
You mentioned the stock market, Greg. Well, that's partly paper, but if you invest in high tech, not just the low tech that you're talking about, but a high tech, and inflation takes hold, won't the prices of the high tech just go up and protect you as well, because those prices will go up?
It will for a while, but history's pretty clear on this too. We saw this in the 1970s. This was the last time we had big inflation, and a lot of your viewers, oh, I remember those days when inflation was raging and Jimmy Carter was in charge and we had gas lines and so on. At first, stocks rose, but then what happened was all the prices for them began to rise too. And so what happened was the profits began to fall. And so what you'll see is, here are the numbers. In 1965, the Dow Jones Industrial Average, we all know what that one is, hit a high of 864. For the day, that was a big number. On the first day of trading in 1982, so 17 years later, the Dow was at 865. Wait a minute, 17 years, one lousy point, up, down, up, down, up, down.
Very consistent, very consistent.
Right. But if you adjust that 865 for inflation, the 865 of 1982 was worth 380 in 1965 dollars. You had lost more than half. What had happened then was Business Week magazine, which was everybody read it in the day, had a cover that said the death of equities, the death of stocks. They said, why would anybody invest in the stock market with this horrible track record that's gone back to the mid-60s when you can get a CD that's paying 12, 14%, remember those days? With no risk at all. And they gave last rights to stocks. Well, about the time somebody declares something dead, you probably want to buy it. Because companies that survived the 70s and all that inflation were pretty lean and mean by the early 80s. And then Ronald Reagan took over, and Paul Volcker was chairman of the Federal Reserve, and they broke the back of inflation. And we've lived it ever since. Up have gone stocks, and down have come interest rates. But everything cycles. And where are we now? We have the exact opposite. We don't have the death of equities. We have a nation of speculators. It's what you were talking about. How do we get rich now? It's not hard work. It's not enterprise. It's not building a business. It's Bitcoin. I'm going to play on my cell phone. I'm going to invest in Bitcoin. I'm going to speculate and get rich. But wait, that's not creating any wealth. It's not creating a business. It's not employing people.
Not a product.
No.
There's no products
No
based
product.
on.
We're not creating wealth.
We're not creating
Right.
products or wealth or effort.
Right. We're financializing the economy. And you've heard of industrialization. Well, pretty easy to understand. Building industry. And during the Industrial Revolution and the industrial might of the United States, think of the wealth we created. The cars we made, the radios, the microwave ovens, and even computers and software. That does create wealth. But now what we've become is a nation that plays the stock market, that does GameStop to try to get wealthy, just cryptocurrencies. It's all about how to game the system. You don't really hear people saying, I'm going to start a business, I'm going to employ these people, I'm going to build it, and that will fail. And so how do you come back from that? You create a structure that encourages wealth creation, and you'll be surprised how quickly this country will turn things around. The United States is an amazing country, the best in the world at adapting at this. But right now, we are rewarding speculation. We are not rewarding wealth creation. And Warren Buffett's right-hand man, Charlie Munger, says, show me the incentive, I'll show you the outcome. And he's right. What's our incentive? Do we have incentives now to create wealth? Government makes it tough.
All the regulations, the red tape, and
the taxes, the
taxes.
Bony finger in the chest, you guys are bad. And then we shut down all these small businesses during COVID while we rewarded the big box stores. Wait, what was the message we were sending? They're important, you're not. Well, it's from the bottom up that the wealth creation comes. We can turn that on a dime, but right now our incentive is the opposite. It's an easy solution. Anyway, is this making sense?
Going to the going to the election, I guess, going to elections and voting perhaps is a change.
Oh, sure. And we got to get
with
back
our policies.
To, absolutely.
With our state policies and our national policies.
And we need to get back to honest money, which circles back to what you talked about at the beginning. As you print and you put all of this money out there, what it does is it breaks down confidence between the two agreeing parties with money. So let's just go to basics. I often ask clients, do you know what money is? And they'll say, well, yeah, it's a dollar or a means of exchange. Everybody has an answer, and it's all right.
But I know, learning from you, it's based on work, production.
Right.
That's what it's based on.
And money throughout history has been, camels and goats have been money. Furs has been money.
When they exchange them.
Right.
Yep.
Gold and silver has been money. And now then it was dollars, now it's digits and plastic credit cards. Money is what you and I agree it is. And an agreement implies trust. Well, who are the two agreeing parties in the United States? You have the government on the one hand, and we, the people, on the other. Diane, what do we, the people, agree to do? We agree to work hard, pay our taxes, be good citizens, contribute, create wealth. What does the government agree to do? The government agrees to give us a currency that's of value. Diane, as the government prints all this money, and they devalue the currency, that devalues your work without your permission. That's breaking the agreement, and trust begins to break down. So what do the people do? They know they're being gamed. They can't quite figure out how, but they know it's off. So they learn to game the system. They start taking benefits they shouldn't take. Maybe they cheat on their taxes. The government finds out. So they come and they put the pressure on the people. The people get angry, and you get this spiral down of mistrust. And what are you seeing out there right now? Do you see the people trusting the government, the institutions? I don't. I see this trust breaking down, and money is a symptom of it. So, how will this end?
So we've got a few minutes left, Greg, and we're going to have another session with you, so I'm grateful for you to stay. What do we do? Really, what do we do?
We go back to honest money. So it's really time to have the heart-to-heart with the American people and say, hey, look, we have not hit the point of no return. Don't think that. Now, we're on the trajectory, and we're getting closer. But we need to go back to rewarding and wealth creation. We need to bring industry back to the United States. We need to make product the world wants. We need to tighten our belts. We're overspending. We need to incentivize hard work, effort. I mean, things that make you feel good about yourself, and not just taking a stimmy check, throwing it in the stock market, putting it on margin. That's borrowing money so you can buy even more stuff. You don't reward that behavior. You reward the roll up your sleeves, get to work. We're going to help you. We want to be partners with you.
So how can we demand that we return to that?
It starts with the politics. It starts with your leadership. It starts with the government. And right now, we're really out of balance. There's an old Spanish proverb. 3 farmers. One farmer takes more from the earth than what he puts back every year. He eventually starves. The second farmer, he takes from the earth but puts back exactly what he took out. He'll live subsistence for the rest of his life. But the third farmer, he grows crops, takes from it, and he puts back every year, he puts back more than what he took out. And he becomes prosperous, and he becomes wealthy, and he becomes respected and honored in the land. Right now we have a system, and I'll say an elite group, that take more than what they put back. We need to reverse that. Our leadership needs to be putting back more than it takes because the trust is breaking down.
But do we have to wait for the next election, or do we have to buy up some land, farmland here in New Mexico? Ranch
well,
land?
no, we can eat. I actually believe New Mexicans give back more than what they take already. New Mexicans are amazing at this. It's our leadership that doesn't. Now, as investments, I would say go to the low-tech sector that is inflation sensitive, you will do better than the papery side. We'll see how that plays out. And I can't give blanket advice, on TV, but that's where I'm positioning clients and have been for a while, and we've done well. I think this is going to be with us for a while.
When you say a while, Greg, how long is a while?
At least 2 to 3 more years. Once this gets started, to think you can just flip the switch and reverse it, history tells you otherwise. So can we then, over the course of this time, from the bottom up, change the philosophy of we're going to give back more than we take? And that starts with us. We can change it. And actually, I believe we will. I have lots of faith in the American people, and in particular, New Mexicans.
But again, a lot of the New Mexicans got the stimulus checks,
Right.
and they're out there spending money into the stock market that's raising it to those inflated levels. You said 2 times worth the national production. That's unless they sell out, they're going to be left with perhaps nothing if it falls.
There's going to be a lot of pain. There's no doubt about it. But Americans are really good at coming through a time of turmoil and trouble. We adjust. We've seen this throughout our history. About every 80 years, Diane, I could give you this story, but we don't have enough time.
And our next show.
America goes through a time of trial. And we come through that trial better. We're about to go through a time of trial, and we'll come through it better.
Except we don't have 80 years to, our grandkids perhaps, but we don't have the 80 years to enjoy the fruits of the trial.
No,
we'll be gone.
But the hero generation will rise up, and we can flip it faster than you think. Cultures will change faster than you think. I want you to remember when hippies were everywhere? And
They're still here in Madrid, but anyways.
Right, but remember, one day it just ended. The hippies were gone, and everybody was a yuppie tying sweaters around their neck and wearing pink polo shirts. It can change on a dime.
Okay.
That'll happen.
I have faith in you. Greg Zanetti from Zanetti Financial. Thank you. All of that is in your head, nothing in notes, all that information, amazing. And we're going to have you back. So I appreciate your time today.
I've been very blessed.
Thank you for watching the show. I'm Diane. See you next time. Bye-bye.
Issues and Answers with your host Diane Kinnewater is presented as a public service to inform, educate, and better the lives of New Mexicans. To comment on today's program or to purchase a copy of any Issues and Answers program, visit sunbroadcasting.org or call us at 505-345-1991.